I have to make a decision for my charting software. MB Trading discounts IntelliCharts, which I downloaded today, but I can't see that it has volume, and it costs $50 a month after discount. I also downloaded Ensign, but I cannot get it to work. I think this is what you use, and therefore it would show the volume. Signed up for a free quote.com feed, but I still can't even see the charts. Okay, my suggestion would be to get on with Ensign support. Ensign has a great, they ask, can you show how you set up your Ensign up for a free feed? Please contact Ensign for support. I don't want to get into the software game. Ensign, if you've downloaded it, they've got, I think it's support at ensign.com. They're great guys over there. I've worked with Howard and his brother for a long time, about, I think, 6 years now, and I've never had any problems with them. They're very responsive, very accommodating. Number 13. What conditions will the pro money try to stop, hunt, or push the market in a certain direction, really when times get slow? Okay, that's why I advocate only trading in the sweet spot. Because if you get outside of the sweet spot, you run the risk of the professional money taking advantage of the slowness or the lack of orders. Okay, so right now we're about 4 o'clock Eastern. There's just not a lot going on, right? There aren't very many orders coming through. So the broker, if you had your stop sitting right here at 300, could very easily scroll this price down, boom, take you out, and then push the price right back up to where they came from. Or what the government is trying to crack down on is just coming down here, boom, taking your trade and moving the price right back up. Okay, it's better. You're better off to trade when there are a lot of orders coming across the screen, where the market maker just really can't do that for a lot of reasons. The order flow is too strong. The market is moving in the overall direction. Plus, there's just more money to be had than coming down and taking orders well away from the market. Okay, number 14, thank you for the great course. I'm thoroughly enjoying it. You're welcome. I'm glad to hear that. Can you please go through the short trade at 162 on the 26th of September? Let me make sure I've got the right date here. Yes. Okay. All right, so when I was talking about monitoring, and I'm not exactly sure what the price levels are, to be candid. I just don't have enough time to try and dig through the video. But the question is, I'm not quite sure what you mean by monitoring the trade. Well, if it were an autopilot trade, and say I'm looking at a pennant pattern here, I would set a buy stop up here, and I would set a sell stop down here. Okay, I'd have two levels looking to get in, because the market tends to break out of these pennant patterns or flag patterns with some good volatility. In other words, you have a big push out of it. Well, if I think the market's going to whipsaw like this, then what I will do is watch the trade. And what I'm looking for is, I'll bring in the 15-minute bar here, and I'll scroll back quickly to the 26th. So if I were looking for the pattern to break, which is roughly like this, then what I would do is watch on the 15-minute chart, and let's use, okay, let me move this down just a little bit. Okay, so this, let me get the whipsaws all in. Okay, so this whipsaw is this whipsaw here. Okay, so, well, first of all, you can see here by waiting for the close outside of the line, we just wouldn't have gotten in. But let's say hypothetically you did. Then on this bar you got in. If the very next bar is down on the 15-minute time frame, especially, and it engulfs the other bar, let's go ahead and zoom way in here. Okay, remember this area, whoops, this area here is this area here. Okay, these two are connected. If I see the market immediately turn down, then I want to get out, because I want momentum. I want momentum pushing in my direction. And this type of action is a good sign that momentum is at best going to go sideways, or if it does go up, it's going to fall back down.